Good evening, everybody. All right. I guess the rhetorical question is, did the market sell off today because of Manchin's no to the Biden situation, or the fear of COVID shutting everything down again? Thank you, Bill. But what I have discovered is no matter what the reason, it doesn't matter. All we really want to do is analyze what everybody's decision is. And obviously, it's bearish as far as the Dow is concerned, and it's bearish as far as the Nasdaq's concerned. Now I see after hours the Dow futures are up 130 and the Nasdaq's up a little bit. However, that doesn't mean a hill of beans until we see what the pre-market futures are showing about 10 minutes before the market opens. But observe the obvious, which is we're in a downtrend and could be a trend channel still taking the markets down. Now we're sitting right here at a support level. However, we're still looking at stochastics that are drifting lower. So I wouldn't be anxious to jump into any longs at this point. So predominantly short. However, we can see there's things that are showing some strength. We are recommending blue today. That blue opened way down here, but you can see what happened by the end of the day. This is still a very good bullish chart setup, so you want to keep that on your alert page. Oops, what did I just do? And some of these small biotechs are working very well. Another one that if it breaks up through this level, after supporting right here on the 50 and the T-line with a left-right combo, you referring to BLUEFT? No, you wouldn't call it a belt hold. You just call it a bullish indicator. Let's see, and we've been watching Alex because it had the prospects of doing a bobble breakout, which it looks like it's doing. So, and again, the bobble breakout is relevant, or any pattern is relevant, based upon you saw what the markets did today, yet they were still buying this one. So that told you that pattern is setting up for some reason, which obviously is the bulls are still in control. Arlo, J-hook pattern. Where would you suspect it's heading to? At least to the top of the channel. Now, RDWR. Fry pan bottom, trend kicker, breakout of the 50. You stay long. Right now we have a safety stop at today's open. It shouldn't come back down through that level. Apparently the gold and silver market is holding up. You could still be a buyer of MAG on positive trading tomorrow. There's your consolidation right back to the T-line after your gap up from a hammer signal, support. Wouldn't be afraid to be buying this one. There's a little gap right here, which means they're probably heading for the 50-day moving average. And RVNC holding up well. Kind of a bobble breakout situation. So you could still be buying this, especially if it breaks out through this level. And just use the T-line as your stop. So there's some good longs, but obviously in this market, you want to be more concerned with the short positions. You can see the kind of a little bearish engulfing signal after the gap up back through the T-line. If this opens lower, you've got a bearish doji sandwich, which means your next likely target is back down here to test the 50. Another one that if they trade this lower, meaning back below today's low, or I'm sorry, today's open, you can see how it failed at the 34. You can see you're in a downtrend. Then they took it right back up and failed again at the 34 and closed below the T-line. First target, second target, a wave 3 to the downside. So right now, just holding on to the short positions is the prudent strategy. PDD, EDS, this is Dillard's. You can see how they failed here at the 50, kind of your blue ice failure, making a likelihood of heading to the 200, your next target, blue ice failure. And you can see they're selling off the retailers, Macy's, in a steady downtrend. Now we were going to short yellow freight today. It held up too much. If you did short it on weakness, would have closed it out today if it closed back up above, or when it closed back up above the 50. Because what did it trading down here tell us? That we should be in a doji sandwich, which it didn't do, and it wouldn't be holding at the 50, which it did. So that told me, let's go find a better place. Where is Steve getting the stocks? JC, these are stocks that we have probably recommended over the last week or two that are existing positions. And this one we recommended shorting today on weakness. So we try to illustrate what to do with them when we do execute a trade and when to close out a bad trade real quick. So if I had shorted this one today, I would have closed it out, because now we're getting in the oversold area and they're showing support at the 50. There's better places to have your money at this point. IONQ, all you can do here is stay short. Run. There's your bearish J-hook pattern with your bearish best friend signal. You stay short. Right now, you'd have your safety stop at today's high. And I saw somebody say they were buying LWLG. I don't know who it was this morning, but my question would have been, why? There was nothing here to show there was any bullish confirmation. You can buy, Bob, you can buy puts instead of shorting stocks, or you can buy short funds. If you think gold is going down, you can buy short funds, which would go up when gold goes down. I'm trying to think of some others. So there are short ETFs out there that are shorted stocks, so that you're buying an ETF that when the stocks go down, the ETF goes up. All right, so today there was kind of an influence on the fact that if they're trying to shut things down again because of another COVID-type scare, and they're recommending everybody stay home, you want to look for the stocks. Netflix, for example, was trading positive today because I would consider that a stuck-at-home stock. Zoom was another one. It wouldn't have executed, but if it comes back up through today's open, you want to be buying. You can see the series of dojis gap up, or not gap up, but the strong price move up through the T line, which had been acting as a resistance level. Now where do you think your next likely target is? Looks like there's a gap right here at the 50-day moving average. Well, you don't know if it's going to become a trend kicker unless it gaps up above today's open and goes positive. If it opens here and trades here, 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 you don't buy it until it gets back up through this open. So if you did get into Zoom today, it better open positive and trade positive tomorrow. Apple has been acting strong. I mean, they're not selling this off yet. And I think it's been trading up a little bit after hours. And QCOM was another one that had strong sell signals and trading up. But right now, if you're short, you just stay short until you see a close above the T line. You just have to rely on the probabilities that as long as you're below the T line, you're in a downtrend. So Tesla. Now Tesla is kind of that trend kicker signal. Opened here, closed here on Friday. Today it opened below where it opened and traded lower. That's still a good, strong indication the bears are not only in control, but in a strong control. Amazon, kind of the same scenario. It's stayed in the downtrend, and look where it opened today. It opened below Friday's open and traded lower. You could still be shorting Amazon on weakness tomorrow. NVDA, NVIDIA, another one. We're traded up a little bit, but you still can short this one, especially if they trade back down below today's open. Okay. I wouldn't be going long, but if you don't like going short, there are still opportunities to go long. Dog Z, J-hook pattern. And look where your J-hook pattern is working, right here at the breakout level. QDEL, look where your doji sandwich occurred, right here at the breakout level. This is as some of you saw in the day trade and swing trade entry. This is such a high probability entry because of the doji sandwich opening positive after a doji right at a breakout level. We would be buying it because of the doji sandwich. Everybody else is buying because they can see that it's breaking out through the resistance level. This extremely high probability entry point. Out of your trend kicker breakout. Whoops. Through this area, it tells you there's probably more upside. And there's your breakout. There's your alert. Wouldn't get in yet. Wouldn't have gotten in yet because it didn't break up through this level. But look where it did break up through this level. I mean, this is why you want to always have the T line on your charts. Because notice it moves sideways, 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 till it hit the T-line, or the T-line caught up. Now look when the next move started. I would suspect there's still more upside. This would be a case where I'd go and see what caused that move, what news, and then see whether that's going to continue more upside prospects. And GNFT. Oh, that's why I was wondering. There's your fry pan bottom. There's your best friend breakout. Another reason to go and find out what the news was that created that price move. So we know the biotechs were acting well, and it's probably because of the COVID getting back in the limelight again. So here's HRMY, Harmony Biosciences, kind of your bobble breakout with additional. Oh, Raymond, if you've got, if you're using Think or Swim, there's a column over to the left-hand side of, and one of the click things over there is news. All you have to do is click on that. It kind of drops down where you can type in your symbol, click on it, and then you click on all the news items and you go up to see what the latest news was. You can also go to yahoofinance.com. We'll look at that Wednesday. Let's see. TPTX. Observe the obvious. There's your fry pan bottom breakout. That one I wouldn't be afraid to be buying on positive trading tomorrow. Whose handwriting is this? TCDA. There's your fry pan bottom. And notice where the resistance level was. And then notice how they went through the resistance level. They gapped up through that level. That's pretty much telling us wave 1, wave 2, wave 3 is in progress. GRTX, another alert where they broke it out. I'd be watching to see if this starts trading positive. Definitely would go and see what the news was. And this one had a big move. This is one of the COVID test kit making companies. You're sitting right about in this range. Look at kind of your McMuffin. There's your Morningstar signal, double doji sandwich. That would imply there's more upside to this one. We did Alex, we did a QST. Here's another. Now, notice what was happening today. Obviously a big down day in the market. But notice how many fry pan bottoms we've seen. Again, this is to illustrate the fact that the buildup of investor sentiment apparently is disregarding what the general market is doing. So, and this is kind of clarifies that a lot of these fry pan bottoms, which is a buildup of investor sentiment, which was building up in spite of the fact the markets were selling off, telling you there's something going on there. That's why the benefits of seeing or recognizing candlestick patterns is at least threefold. One, it puts you in the right direction. Two, the magnitude of the move is usually going to be excessive versus just merely an uptrending stock. And in this case, they're uptrending stocks even in a down market. And three, if the market just falls out of bed, more than likely something like a fry pan bottom setup gives you a little bit more time to get out of it because of the buildup of investor sentiment. So if I had bought this one today, I'd probably just put a safety stop right here. Or if they gap it up tomorrow, then I put my safety stop right here. So this is just you can see QCOM, fry pan bottom breakout. When it's positive, where would we expect this to move to? It should be moving in this direction. Where should it not be moving? It shouldn't be coming back to the halfway point of the candle that told you the bulls are there to break it out. That gets you out of a bad trade very quickly and keeps you in good trades just based upon the confirmation of that trade. All right, so if we kind of can conclude that the downtrend is likely to be still in progress, and that they could probably come back down on the Nasdaq and test the 200. That means right now you definitely want to be orienting your positioning. I don't know what I'm doing here. I want to get done. Okay, orienting positions that look weak. Smith & Wesson. And this is once again why adding the key line to your chart just enhances what's happening. A lot of people, and I forget which charts they are, somebody was asking about a chart that looked like this, and they were buying, and my answer always is, well, wait to see what it does once it gets to the T-line. Well, you can see what it did once it got to the T-line. It failed. Now you've got a little bearish best friend. I wouldn't be afraid to be shorting this one on weakness tomorrow. Johnson & Johnson, somebody pointed out, it's not going to be a very vivacious percentage move, but the probability of it heading lower is extremely strong. Now, it's only going to have a 3% move from here to the 50. However, maybe putting on a bearish spread becomes much more enticing. So anytime you see that uptrend with the gap down, what should we expect? That force to the downside. Anytime we see that bearish kicker signal, expect more force to the downside. Let's see, we did BABA. BABA, same scenario. There's your trend kicker. Dumpling top, failure at the T-line, possibility of another move to the downside of that magnitude. ISIG. Yesterday, Friday, if you had been buying this one, looking like it's going to do a nice J-hook pattern, but where would you have stopped out of this one? If they opened here and trading positive, who's in control? I mean, this is just very simple analytical logic. Obviously, the bulls are in control. They're bouncing it up after some inverted hammers off the T-line. But if this was the point where the bulls were taking control, what happens when it comes back down through that open? The bears are taking control. Close it out. It's not a good trade. Now it almost becomes a viable short. But that was your indication that this pattern was not working. Ruby, same scenario. Kind of dumpling top, and they broke that support level. Look for wave 3 to the downside. Sava, same scenario. Let's move that. Failure. Here's kind of your bearish flutter kicker signal. Broke this level. I would suspect more downside. PPSI. This is why knowing what the signals illustrate is very important. Look at your shooting star signal. What did that pretty much indicate? This area was not being breached. Get ready to close out, or you would have closed out this position. Definitely would have closed it out on weaker trading the next day. Now you got a bearish doji sandwich. Where do you think your next target would be? Down here to the 50-day moving average. Remember, the signal itself is the most important factor to tell you what's going on in investor sentiment. Wave 1, wave 2, failure at the 50, wave 3, starting with your bearish doji sandwich. Oops, I don't even see a 200 on here anywhere. Lots of 200. Anyways, wave 1, wave 2, wave 3 could be another 2.5 points to the downside. Was it that recent? I don't even know. There it was down there. Yep, that was in September of a year ago. Okay, what do we got here? BZ. This is what we call the spreading pattern. Point 1. Point 2 below point 1. Point 3 above point 1. Point 4 below point 2. And point 5 above point 3 and 1. You can see how there's kind of a spreading formation in progress, which usually means this usually gets slammed real big time. Why? I have no earthly idea. It just seems to work. Another wave 1, wave 2, bearish kicker signal going into wave 3. And this is why you want to know where a signal is occurring. Gap up, not quite in the overbought area, but when they gap up, what should it be doing? If it's not exhaustion, it should be going in this direction. If I owned this and it gapped up and started trading positive, my first stop would have been right there. Well, if I didn't have time to put it there, my next stop is right here, the previous day's close. Because logic says if they've gapped it up in the overbought area, again, using the Japanese race traders analysis of where do most people buy, they buy exuberantly at the top. If they start selling it off, if they come back down through here, they're going to do some sort of candlestick reversal signal. And where is that candlestick reversal signal occurring? right at the same place they did a major candlestick reversal signal before. I want to be out of that trade. What was the unstable expanding wedge stock? Oh, I don't know. Wasn't that one? BZ. And GRPH, we were going to buy this one today. Had it open positive, what would we have had? A bobble breakout. Well, it didn't execute. And notice what it did do. A bearish harami that's resisted right at the 50. Now what does this analysis imply? Well, if they open this lower tomorrow, obviously they're not going through the 50. And what's the other assessment can we visually see on this chart? It's in a downtrend. It bounced up to a major resistance level, resisted here, resisted here. Now if they take it back down, where do you think this one is going to? Probably back down into the trend channel. So this is a high probability entry that if it opens lower, it could be heading down here into this range, or almost 4 points on a $11 stock. That's about a 45% price move. All right, so the market is closed on Fridays. That means we've only got 4 days this week. One's already gone. Stochastics rolling over in the Dow. You have kind of a kicker type signal, then a gap down. It almost hit the 200 today, but I would still suspect they're taking it down some more. I would look for, let's draw them on here, at least levels that everybody would be watching. There's our upside, and maybe here's our downside. And if it came down and bounced up from here, what's that tell us about our market trend? Pretty much kind of a wedge setting up, that there's not going to be a whole sustained short or a long sustained long. It's probably going to be waffling for a while. All right, we're done early tonight. That's just because I think the trend analysis should be pretty obvious. That things rolling over, kicker signal, even though it might bounce around, I think we're still in a downtrend. All right, is there any general questions on candlesticks? Is this the diamonds? Whoops. No. Where does where's a signal become a signal? At the appropriate place of a trend. Right now you got a gap down, stochastics heading down. You might be seeing a bounce here because it hit the 50. But if you see positive trading, consider it a bounce. Just be very nimble. But if they take it up, and then they start dropping it back down, we still have to assume we're in a downtrend. Nasdaq is down to the trend. Nasdaq is down to the trend channel. Well, it's right here at this support level, but here's kind of your trend channel, which would I looks like would correspond with hitting the 200-day moving average. Right now, I think the futures and the Nasdaq were up a little bit, up a couple points. I don't know. Is there a double doji scan down in the file in your very right-hand bottom corner? There's a file. Is there a double doji scan in there somewhere? Is this uranium still in a downtrend? Whoops. Oh, Steve, why are we checking the 10-minute chart on the Nasdaq? Number one, it doesn't mean anything right now after hours. And number two, if you were looking at the 10-minute chart before the end of the day, remember that chart, 10-minute chart, when the market closes, becomes irrelevant. Because what are candlestick charts? Candlestick charts are the illustration of investor sentiment at that time. Well, when they close the market, that time has nothing to do with the time the market opens 14 hours later. I think it's about 14 hours later. That's the uranium ETF. It might be supporting. Yeah, Joe, all that is, yeah, the futures right now are irrelevant. They're trading all over the world, and they don't have any meaning until approximately 10 minutes before the market opens tomorrow. That's where everybody that's trading the Nasdaq futures are making decisions for the day. Anything prior to that doesn't mean a whole lot. Okay, we're supposed to be doing our individual ones when I tell Jim to do the double line, which we haven't done yet. OPK, you can stay long, but you put your safety stop at today's, just below today's low, making sure this isn't a resistance level. Let's see. Crude oil backing off. It was down. Let's see. I think that's the February contract. Crude oil dropped off. Cheryl, hang on until I tell Jim to do the double line. No, stochastics don't mean anything. Usually when you see a breakout pattern, stochastics are usually going to be already in the overbought condition. Okay, the fact that this still looks bad or short, this is the corporate bond index, that's another indicator. Let's see, CLAG. It could be, except after hours, it's trading up. So, yeah, if you were going to short this, I'd wait for it to probably at least come back down through the 200. Trying to think of the other bubble breakout. No, nah, I can't think of it. Shopify looks like you're wave 1, wave 2. In wave 3, you just stay short. Okay, so we've only got 3 more days. It's going to be closed on Friday. Bob, that's another thing you can look at. If you wake up in the morning and they're saying that the European market is down 1.3%, then you take a look to see what the futures are for the Nasdaq and the Dow. That's going to give you a good indication of what sentiment is, whether the trend is continuing. All right. FB, good night. Okay, I guess, Jim, let's go ahead and do the double line. Oh, don't you? We tried to keep them to a... Oh, Jim. Yeah. We'll try to just keep everybody to a 2 limit. Just stay long on this. Put your safety stop at today's open. Prego, you could be buying this one. That's a good looking chart. Expect a filling of the gap, which means they're probably going to be heading up to the test the 50. Dish, nothing. If you had been going long, we should have closed it out today. Now might be more inclined to go short. Not your best short. And Taiwan Semiconductor, stay short. Micron, I think they were trading up here after hours on good earnings. So watch for your best friend signal on Micron tomorrow. Oh, Express. There's your dark cloud. I would not be long this one. It's back below the T-line. Stochastic's heading down. Oops, I'm sorry. Now I would be a buyer of this one if it comes back up through the T-line, which it did. Now you could be buying that J-hook pattern. SPRB, nothing. Here's another illustration of if you've got a big move like this, and that was a 65% upside, at the end of the day, I usually will take off half the position, if not the full position. Then if it opens lower the next day, you close it out. Now you have to wait for the next buy on this one. Not a buy until it passes Friday's close. News appears to have been an analyst upgrade. Yes, so anytime you see an upgrade, that is not relevant change of investor sentiment. All that is a change of temporary supply and demand. So if I see an upgrade and it has a big move like this, I'm usually going to take profits pretty quick because that's likely what everybody else is doing. That was not a change of investor sentiment. That was just a change of supply and demand based upon everybody following that analyst making a decision. All you can do here is stay long. No, I wouldn't buy here. Roy, this is what we want to get away from. If you're thinking that you should be buying here and you're already up in an overbought condition, and it's already moved up 50%, you shouldn't be thinking, I want to buy here. You should be looking back and say, where was I supposed to be buying? Somewhere right in here. When they gapped it up, consolidated, and then started taking it back up. Let's make this big enough where we can see what we're looking at. So now, I'm saying this not as sage advice. I'm saying this because this is what I used to do. I would say, oh man, I'm going to buy here. It could go higher. But then I'm thinking eventually when it doesn't go higher, I was in the overbought condition. It already moved up. Where should I have bought this? That's what starts getting me acclimated to saying, all right, if I see something like this, kind of a bullish harami off the 50, a gap up, they use the T-line as support, I can start buying right here. That keeps me from being like the typical investor of where the most people buy. They buy exuberantly at the top. AVNS. You could be buying this one on positive trading. There's your Morningstar signal. There's your T-line crunch. Notice how they couldn't close it below the T-line. You can be buying this one if it breaks out. At least figure your first target is coming up here to test the 200. GameStop. Oh boy. If you like this one, you could be buying this one on positive trading. Just use the T-line then as your stop. KMPH. That one, if it opens positive, notice what they did today. When they opened positive, where'd they go to? Right to the first target. Now, if I had bought down here, that's where you flip to your 10-minute chart. 10-minute chart. 10-minute chart. And as soon as you saw it hit that first target and start doing this, you take your profits. Because what do you think this is telling you as soon as, as soon as it hit here, people were taking profits. When could you buy back? When they came back up through that level. I hate that darn thing. Came back up through that level. That would told you they were doing a J-hook pattern on the 10-minute chart and that the 50 was now not acting as resistance. The short Qs, yes, if the market continues to head down, you can buy this short fund. It'll keep heading higher. Roku. Probably wouldn't pay attention to Roku right now. Notice you don't have any reversal signal in here. All you have is positive trading. That doesn't really tell you all that much. It's still in a downtrend. I would probably be, Tim, I would not be going long on this one. First of all, the market itself is not conducive to buying longs, and this isn't your best looking chart. There's no strong reversal signal. BTNX, you could short this one, yes, on weakness tomorrow with the expectation at least your first target would be down here, the 200-day moving average. Alcoa, if you're long, you can stay long. I wouldn't be buying until they broke back up through this level. Oh, that's a green candle. Yes, if you're long, stay long. Probably, I wouldn't even be a buyer. I'd probably have been a buyer down here somewhere when you had a little J-hook pattern at the 50. Billy, nothing great here just yet. Still in a downtrend, and you don't have anything massively strong on this one so far. Crisp, same scenario. You can be buying this, but I wouldn't be buying it until it comes back up through Friday's high. Remember, you're still fighting against the flow. If the markets are selling off, anything that's trading positive should have very compelling bullish charts. Nothing wildly exciting on this one either. I mean, these are, when you look at them, they're heading in the right direction, but you're hoping there'd be more bullish confirmation. Nothing to tell you there will be. TFFP, kind of a little J hook. Now that one has more compelling reason because you've had a hammer, bullish engulfing, staying above the T line, suspect at least the 200 to be the next target. SOPA, I guess, they were adding this to the one of the indexes. No, that's not a breakout. That was a change of supply and demand because they're adding it to the indexes. So you just have to be careful with that. Lucid, nothing. Would not be long or short. Wynn Resorts, if you're short, you stay short. You use the T line as your stop. Nothing on this one either. Well, there's no direction. There's nothing that really tells you want to be long or short, except the fact that now I can see what you're looking at. The fact that they gapped it down at the previous day's low. If they do open this lower, you can go short. Let's see. Let's make this a little. That's not what I want to do. I want to do this. It wouldn't be real intriguing, but at least it would be a high probability trade that eventually could come back down to the bottom of the channel. Ford hung in this sideways. I wouldn't be a buyer of this. Long term, you continue to hold as long as it probably now stays above the 50, which is still the bottom of this channel. And I wouldn't be a buyer of this, of Ford, until it breaks out through this level. Nothing here. With it closing below the T-line today, if you'd gone long, you would have closed it out. Scoop? No, 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 FT. Is that a scoop? What is that pattern? Target, stay short. Use today's high as your stop. Verizon. All you can do here is stay long. I would use today's open as my stop. Apple, if you're short, you want to see it open lower and trade lower. Stochastic still heading down. One bearish candle, two bearish candles that close below the T-line. Right now, all you can do is really stay short. Nike. Where is it? Yeah, if it's gapping up, at least you can figure they will be heading for the what was it, the T-line of the 50. United Health. You've got a doji sitting right on the T-line, so this makes the analysis very easy. If they open it lower, you want to be out of it or possibly going short. To stay long, it needs to open positive and trade positive. Perry, no, this is not a bobble. It's got the makings of a bobble, but there's nothing yet to tell you this is a bobble. For all you know, If they open this lower and do a bearish doji sandwich, this is a good short. So a pattern is not a pattern until you see it forming. So you'll know what this one's doing based upon how they open it tomorrow. And I would still make sure that if it opened positive, that I wouldn't be buying until they do get up through the 50. BHC, you're in a slow uptrend, but not anything exciting. So if you're long, you can stay long. It's just not a very intriguing chart, because even if it comes up to the 50, which would probably be your first resistance level, you're starting to already run out of steam as far as your stochastics. Let's just, yeah, that was a long answer to say I'd be, even though it's trading positive, I'd be someplace else. AMC, you could buy this one on positive trading. If I was buying this one on positive trading, I'd want to see it come up through the highs of the last couple of days. Let's see, we've done crisp. Nothing there. I'd be someplace else. I don't know if Forex is traded over there, because I don't trade the Forex. I would rather just trade each currency on an individual chart. Now you got a nice fry pan bottom setting up. So if you're long, you stay long. If you're buying, you wait for it to break through that level. And docs, right now, all you can do is stay short until you see a buy signal. Gold is in Barrick's gold. That's a double doji setup, meaning if it opens positive tomorrow, you can be buying. Gold itself is backing off a little bit. So even though it's broken out, this is January gold. You still need to see it stay above the T-line and continue to trade positive. Whoops. Silver backing off. So notice what happened on silver. This is the January contract. They took it up, and now they're backing it off. They're right back into this sideways mode. Bidu, stay short. Pfizer, stay long. Use today's low as your stop. And Tesla. Oh, no. Tesla, stay short. Another one where I'd probably use today's high as a stop if I was short. Okay. I don't think we're going to have a real bullish reaction. You got the overhead pressure of COVID back in the forefront. You've got the prospect that the new spending bill, which is what was probably propping up the market because of all that money going into different sectors. Well, if that's not going to happen, and now you've got the overhanging prospects of COVID shutting down things again, probably making the retail buying pretty dismal going into the last few days. I would just go on the premise that as long as we're trading below the T-line, investor sentiment is still telling us we're in a downtrend. I will, no problem. Okay. Santa having problems with the vaccine. I don't know. His face is always red, isn't it? All right, everybody. We'll see you. Oh, we're at 9 o'clock. We're way ahead of schedule. We'll see you bright and early in the chat rooms tomorrow.